Hey there, random internet strangers. It's Random Crypto Guy, the worst crypto channel on YouTube. Dun da da, dun dun da da. Hooray! Is it doom and time for Bitcoin? People are panicking. It's still craziness out there, raining cats and dogs. What are we gonna do? What are we gonna do? Well, I'll show you. Not that difficult. Let's start with, this is that indicator that I told you about, the TSP-MA/S/D, that's supply and demand utility. This is that one where you're looking at, when it's green, you want to buy the dips, and when it's red, when it turns blood red, that means there's blood in the streets, and you want to be buying daily on the daily. And we've almost reached that point right here. As you can see here on this chart here, you might want to start thinking about buying on the daily, just a little bit every day, so that you got some, you know you're buying at a bargain price, that there's blood in the streets, and that you're slowly, you don't want to put your whole wad in all at once. If you have, let's say, like $1,000, divide that up into $10 a day if this is a continued trend. Now, if it turns green, then we can put it into a buy, and then carry on our way. And I'm going to show you a little bit on how to do that. But as of right now, we are almost there. This hasn't. These moving averages. This is what's called a guppy moving average, and basically, think of it as a school of fish. That's where it gets its name. And then as the guppies follow the price, they'll flip, and they'll go from green to red. And they've almost completely flipped. Like if we go back here, they've completely flipped almost entirely right here at this point. They didn't quite go all the way. I don't know if you can barely make it out, but you can see that this final guppy didn't totally flip on, actually no it did, I'm sorry, my bad. So when these moving averages completely flip over, that's the time where we want to start going into, on the daily, $10 a day, $1 a day, whatever you can afford. And we're almost there, not quite, but pretty close. So I would soon just say go ahead and start. If you are dollar cost averaging in, to just start right now. This is a really good time to start that. And as I said, you don't want to go all in. This is a time where every day you put in $10, $10, $10, a dollar every day. If you can't quite do that, maybe just do it on a weekly basis, of maybe $10 a week, $100 a week, if that makes it simpler. But I just wanted to show that the flip is almost complete, and so if that is the case, there's still a little green here, so it's not quite completely flipped over. So that's something that you want to keep in mind, that I would go ahead and start now, and I'll show you why here in a second. Let's go ahead and see, I don't need that anymore, so let's go to my favorite MetaTrader. This is the S&P 500. This is that big sell-off that everybody's been bitching and moaning and complaining about. And as you see, then they started the QE, not QE. That's when the Fed started printing money. Here, let's go back a little bit. Let's zoom out a little bit more. This is where they tried to unwind the balance sheet right here, where they were trying to. The Fed was holding all these toxic assets, mortgage-backed securities and whatnot, and they're trying to unload them and put them back into in the repo market. It's a very complex system. I'm still learning about it, and it's even becoming more complex than even what I knew about it. But basically, that's what they were trying to do, and that was causing the market to crash. So they decided to pump in liquidity into the repo market to purchase these assets so that the banks wouldn't go insolvent. So that they're just pumping money in, print the money that's backed by, and then the banks, they'll take the money with mortgage-backed securities, which are not used as much anymore because they're toxic, and they know that they're not as guaranteed as the treasury bonds. And so banks are holding these treasury bonds, and they swap them for this free money that the central bank just prints out of thin air. And that's why that money is backed by your children's taxes. A 10-year treasury bond is, in 10 years, your children will be paying those taxes. You will too if you're still alive, but I just, it's more important to understand that they are stealing from your children to pay to keep themselves solvent by the printing of the money, just into existence, and then we get the privilege of paying taxes so that we can, use money that they create out of thin air. So that's in the overwhelming majority of the money that we pay in taxes goes back to pay interest on those bonds. The overwhelming majority of it. I'm not sure about the percentage, but I'm sure that it's well above 50%, probably even more. I'll have to go and look up that and research that, but I know that the interest rates that our taxes go back to paying most of that, and that's why we have a deficit. Our tax money doesn't go to pay for tanks and roads and bridges and stuff like that. It goes to pay that debt that they print out of thin air, so we get the privilege of using their money with our tax money. So that's how insane the system is. I'll try to explain it a little bit further. I'll just keep ranting about it until you finally get it. But this is one of my favorite ways to look at the market right here. These are 4-hour demand boxes. There was a daily demand box. I put this up on the daily, and we've broken through that. There was a 4-hour box here, which got canceled out on this wick here. So we are seeing some rejection coming up here. We are definitely seeing some rejection here. So that's a good sign for everybody, including but you can see how that was all just a waste of money, that they were pumping money into the market here just to have it all collapse on us because of some flu bug. So we busted through monthly support and daily support, and now we're into this. These are H4 supports, these boxes here, 4-hour support boxes. And there was one here that we busted through, but we got a nice rejection candle here. So that's something positive to look forward to. We are still in the green on our slow trend. We are still in an uptrend, but as you can see, we can zoom in a little closer. Those of you may be looking on the phone. This just turned. This is right at the dividing line where it's turning red. And I wish I was doing my swing trading, because I would have gotten in on this trade right here. I don't know if I would have taken that or not. Maybe. I get probably. But then, because we had this gap down here, so that would probably definitely been a trade that I would have taken and busted through. It would have been into this daily zone, so I don't know. I might have got in here instead. Possibly. Being a swing trader, and then I would have so far be in 162.96 in profit. So that would have been a nice trade. I wish I was a day trader, but I don't have the time, so I invest instead and look at more longer time frames. So this is a good sign right here, this nice rejection candle. It did completely clear out that 4-hour zone that was right here. There was a 4-hour zone right in here. So you can see that it completely destroyed that. Even if I put it down on this wick here, it just chipped it out and took it out. So there's probably no more orders in there for buys. So I expect a little more downside and coming in here. This is what I'm expecting getting into, because there's going to be a lot more buying pressure in here. There's a lot more people sitting and waiting to buy. So that's a good sign that there's you know. But if the coronavirus continues and continues to spread and people continue to panic, well, people are going to panic because the herd's dumb. So that's what the S&P is doing, and Nasdaq and the Dow Jones are all very similar in nature. So let's go to Bitcoin. So Bitcoin, this is the 4-hour chart, and you can see that we have crossed over. Our slow trend has given up the ghost, so to speak, but we are forming up a 4-hour box here at the same place where you saw that rejection on the S&P 500. So this is some good signs that the bulls are fighting back, that they're trying to horn and gore the price back upward. So, and we're starting to get a little, I'd like to see some yellow. These are my squeeze plays where price is starting to consolidate. We haven't got there yet, but we do have some rejection here. And if we zoom out to the daily, now my SupDem doesn't work well with rally-based rallies, so I have to draw them in. But we've got a nice box right here that it rejected right off the tip of that. I told my nephew to buy in at 8,500, and that's exactly where we started our rejection. This is why we have a rally, then consolidation here, and because you have to kind of keep in mind that it's a little more volatile, so you have to look at where it was started basing off of before it shot off again. And here we go, we got a nice rally off of this base right here. So that's why I encompass this into right here from 85 down to 82. So we are, because the S&P 500 right now, everything's correlated because everybody's scared. So all the money's flying and everywhere, and it's even gold's going down. So it's been a bloodbath all around. Cash seems to be the only safe place. And as I said, I took all my altcoin positions off. I'm in cash, and I'm looking at buying in at a few places. Saw a couple good opportunities that I probably missed out on. The Kaiser Network, I believe that's the name of it, just opened up on Coinbase, which will give it a big boost. Chainlink is always going against the flow because it's such a great project, and Tezos is looking to possibly rally off of a base. I took a look at that. But, those are the ones I'm looking at. But what I've decided to do is to, now that I've reached my first goal of collecting 1 Bitcoin, I'm going to collect 32 Ethereum. I find myself trying to play whack-a-mole and trying to grab everything that I can, anything that moves. So, getting squirrel syndrome, squirrel, squirrel, squirrel. And that's not a good way to trade, especially because I don't have the time to be a day trader. I'm trying, getting away from that. So I decided to invest in Ethereum because watched a couple good videos and read some good tweets on it. And basically what Ethereum is an index fund of all the ERC20 tokens. So it's a good opportunity, and then we'll buy it while it's low. So let's see, take a quick look at it. Maybe hopefully I can get to it. Oh, dummy. Ethereum USD daily. Yeah, it's basing as well. So that's good. We're basing right here, doing the same thing. It's a little bit deeper. It's basing off of this here, so it has busted this this particular box here, so it could go down a little bit lower.